first item apart from the recap under agenda item 1. There is going to be a presentation on risky business. This presentation is going to be done via video.
So what am I going to talk to you about today? I'm just going to really cut to the chase and talk about, your concerns within, for example, Bitcoin and how it may be used for criminal purposes. I'm going to try and let you have a perspective on this, which will hopefully enable you to do better work in terms of forensics, etc. But at the same time, have a perspective from a policy point of view. The worst scenario is an overzealous reaction to criminal activity that's taking place using Bitcoin. That could undermine the promise of this technology, and I hope I'll be able to make that a little bit clear to you today. So the first thing is, what can you do today? First thing you can do is the Bitcoin blockchain and other digital currency ledgers are publicly available. So you have as much access to them as anyone else. Now, what advantage does that give you as a regulator? The advantage here is you do not need to coordinate a response. You do not need to call up Europol, Interpol, or other coordination machines. You can simply go to the blockchain and analyze it accordingly. Now that requires some intelligence and it requires some analytics. And some of the things that you will be looking for is linking addresses maybe to IP addresses. This kind of contextual information that may be attributed to a certain public address on the blockchain. That is of value. Now, if you want to track IP addresses on a blockchain, you need to have been doing that for a long period of time for that intelligence to even be of worth. So therefore, probably you need to be working with a third party unless you want to make that initial investment of running your own nodes and tracking IP addresses in different locations. Now, why are IP addresses important? Well, if, for example, an intermediary, such as an exchange, they receive funds from a customer and they receive those funds in Bitcoin, well, there's no real way of telling if those Bitcoins came from the customer, if they came from a third party, because the funds themselves, the customer will claim, those are my Bitcoins and I'm depositing them with you. However, you can't really determine that. And so you have to use probabilistic analysis to see whether or not, whether it's more than likely that the funds came from that customer. And some of that contextual information will be the IP address of the transaction. Now, there are various other things that mitigate that analysis, obviously spoofing IP addresses and all the rest of it. I'm probably getting a little bit too technical, but the key point is you have direct access into this blockchain. And you should contrast that with the current state of affairs in financial services, where you have to now coordinate to get intelligence. Now, what kind of tracking can you do on the blockchain in terms of, obviously, enforcement? So there is event-based tracking and there's address-based tracking. Now, event-based tracking is really you have identified or someone has alerted you that a crime has taken place on the blockchain. It might have been a hack of an exchange, or it might have been an instance of ransomware where they disclosed the address where to send their Bitcoins. Well, now you know of that event, you have the public address where those Bitcoins have been sent, and then your forensic capabilities will be to track where those funds are going from thereafter. Now, this notion here is referred to as tainting. Essentially, it's finding an address on the blockchain where a criminal event allegedly is taking place and tainting that address. And then tainting, essentially, that address, but then tracking the flow of Bitcoins thereafter. And then address-based tainting or tracking is where you've identified essentially a watch list of addresses. And that might be because you've received intelligence from other third parties to say that these addresses are associated with certain persons. They may themselves be on the Interpol list. So that's address-based tainting. But when you have that intelligence, you can do the tainting yourself. Like you can go into the blockchain, taint those addresses, and see where those funds are going thereafter. Now, there's one thing to bear in mind is if you have enough forensic power, and here I'm talking about real capabilities here, you could pretty much de-anonymize most addresses, because most people use the same address over and over again, and their IP address may be the same because they're transacting from their home, etc. And because of that, you can now almost, from this heuristic data, this statistical data, find out who that person is. And there may be social media context as well that could lead you to a profile for that particular person. And from that, you may identify that person transacts once a day, that they may transact maybe 5 times a day, that they always send their money to Coinbase or whatever. You develop a profile for that person. Or I'm not really saying that an enforcer within your country would necessarily be developing that profile, but intermediaries which you may decide to lightly regulate may start to develop these profiles. And so that's my printer. If they step out of that profile, i.e. they do something that's unconventional in their transaction expectation, then that might be a red flag. For the intermediary, they say, well, this guy usually transacts twice a day, and it's only for an amount of, say, $30 in Bitcoin, but now he's transacting $30,000 a day. What's up? So, there are certain factors that the intermediary will take into account. But this is in no way different to other intermediaries and what they would do normally. If you're running a Forex brokerage, you'll be looking at the volume of trades that are going through your account. And anything that steps outside of the ordinary, well, that's a red flag. Or, it can be completely dealt with and assuaged by saying, well, they just won the lottery, or suddenly got a great job, or this normal due diligence. Basically, you don't need to do anything out of the ordinary. The only thing that changes in this context is that you now have access to a public ledger that you can analyze objectively. You don't need to rely on third-hand information. Now, because of this anonymizing factor, we need to bear in mind that if Bitcoin and digital cash and blockchain-based digital currency systems are used in the future, then there's really an issue around financial privacy. Because if I can attribute identity to certain public addresses, and that's relatively easy and doesn't require too much computing power, then why am I going to use Bitcoin when everyone is going to know how much I'm worth? There are certain concerns around financial privacy here. And obviously, for the more informed Bitcoin user, they won't be transacting using the same public address. They'll be creating new public addresses to transact from. They'll be receiving funds in new public addresses. They'll never use the same one over and over again. And in addition to that, for those who are extremely privacy conscious, and that doesn't necessarily mean that they have something to hide, they're involved in criminal purposes. They may just have a lot of Bitcoin and not want kidnappers to know how much they're worth. They may use mixers. Now, what is a mixer? A mixer essentially is you send in Bitcoin into this, and it will essentially mix the Bitcoin up and send you parcels of transactions at a later date. And from receiving, once it goes through that mixer, it's very difficult to now attribute, the original Bitcoins to you. So now it's being dispersed to multiple public addresses, etc. Difficult to say that you were the original owner of the Bitcoins. Now, of course, mixers are used by criminals. Criminals are not stupid. In fact, they're very innovative. So mixers, even though you may have access to the Bitcoin blockchain and you may analyze it for forensic purposes, people may still use mixers to get around that. Now, that brings me to kind of more the policy edge of this discussion. We have to be very careful here because there is a tendency, and I've seen it from my own experience 4 years as a blockchain lawyer, dealing with regulators, helping them shape pragmatic policy. There is a tendency to be quite reactive towards this new technology, especially when you hear the horror stories of ransomware and various other things. And obviously the underlying threat of terrorism, etc., that makes everyone scared. And I think we have to view this. We have to have restraint when we adopt policies in this area, because the reason why the internet thrived, let's be honest, is because there was a lack of regulation, and because there was regulation. And the same is true with blockchain. The promise of blockchain is not the fact that it would be free almost to transact, which is essentially what Bitcoin offers today. It's free pretty much for you to send Bitcoin from one part of the world to the next, undermining obviously the models of Western unions, etc. But that's not really the promise of blockchain. The promise of blockchain is simply to have a shared ledger, is to move from a position in this world of retained control to shared control over ledgers, to offer transparency into this world of opacity. It may sound very idealistic, putting forward that view, but that is the real genuine promise of blockchain. And transparency brings with it security. It brings with it further efficiency. And so we must be careful when we adopt a policy approach to this area, that we do not try and kill the golden goose, if you know what I mean, before it's even laid in the eggs. So, and I think it's important really here to clarify that when we talk about Bitcoin, we talk about digital cash, but actually there is a layer above Bitcoin, which is, it can be used for timestamping. You can use this world ledger as a way to record events, land titles, whatever it may be. You can now implant it onto that ledger, and now it's a record in history that no one can ever tamper or change. But it goes beyond that. Ethereum, for example, is another type of protocol. It's Bitcoin, in essence, with a computer, decentralized computer. Bitcoin with a decentralized computer. It means, in essence, you can be adding programs to this computer, and it'll be spread across the network. And obviously, the main benefit of this is the transparency that comes with it, because when you add these programs to this world computer, you now know what they will do with certainty. Now, you could add to this world computer a financial contract. For example, let's just give you an example of a bond. A bond is a relatively simple financial contract. The issuer will issue the instrument on the blockchain, and with that, they will add certain coupons. It might be 2% interest per year, and a redemption point in the future. So that can all be programmed and placed into the blockchain, meaning that the person who's purchased the bond in the future, they can know with certainty that they're going to get that coupon, and that they do not have to rely upon the counterparty's assurances, because it's all there on the blockchain. And if there are any anomalies, well, they are identified almost immediately. If someone's receiving their coupon and someone isn't, well, it's on the blockchain. So it's very easy to enforce and monitor these financial contracts, which was one of the main causes for the financial crisis, the fact that we didn't have any oversight over how big this disaster was. So, let's just go back to Bitcoin here, because when we talk about Bitcoin at small scale, we're essentially talking about people sharing the same ledger of financial transactions. There is, with Bitcoin, no reconciliation. In this world that we operate in, financial institutions, everyone has a silo. One silo keeps a record of debits and credits, another silo keeps a record of their own debits and credits. And you just hope that those silos match. And sometimes they don't match. Whereas with Bitcoin, there is no silo. It's just one shared ledger between these institutions, creating a permanent record, immutable record where you can't change it. Now, this brings me back to policy. So I think it's really critical that I advocate restraint because I do believe that the real promise of blockchain hasn't come yet. We have to be patient for it. And if we take a reactive approach, one example of which might be Russia, they're struggling with digital currencies versus blockchain. On the one hand, they're making illegal Bitcoin, but at the same time, in the same hand, they're endorsing blockchain and now can form a global consortium similar to R3 around the notion of blockchain, which to me appears to be a certain paradox. So I would address the immediate risks. The immediate risks are consumer risks. So you need to educate your consumers. You need to ensure that your consumers know what the risks are. They may buy Bitcoin tomorrow and may disappear the next day. So they need to appreciate that, just as they should appreciate any form of investment. And now in terms of anti-money laundering, well, of course, the gateways into Bitcoin and other digital currencies need to be regulated, but lightly. Please do not take inspiration from, say, the bit license that are going even beyond what FinCEN require in terms of AML reporting. Take a pragmatic view. Regulate them as maybe you would bureau charges in your country. Obviously, taking account this is a virtual world. You can't really expect that exchanges will be verifying their customers face to face. It's a non-face-to-face business. So if your customer due diligence laws do not adapt well for non-face-to-face, then before you institute that all exchanges need to be regulated for AML purposes, please ensure that your AML laws have a non-face-to-face component to it. Now, from the point of view of your prosecutors and criminal law enforcement, there may need to be some technical adjustment, I would say. And that technical adjustment, to be frank, is not really a big deal. It's more like, well, there may not be a provision in your criminal law to seize virtual currency assets, or you may want to enhance a provision in your criminal law so that the police can seize and even they can sell those digital assets if they've been identified as coming from a criminal source. Now, if you want more coverage on this topic, I suggest you go to bitlegal.io, which is a publication that we manage, where we've gone into all of the technical details of some of the policy issues that regulators are dealing with, jurisdictional issues. We've even gone so far as to look at all of the different countries in the world, pretty much, and look at how they're dealing with Bitcoin. So in summary, really to wrap this one up, Bitcoin, blockchain, digital currencies associated with ledgers, they give you direct access. You no longer need to coordinate with third parties to get access to that information. You can have access to that now. If you have an IT department, you can get them forensically looking now onto the blockchain, forensically identifying event addresses, ransomware addresses, known individuals that are involved in criminal activity. You can taint their addresses, etc., and monitor thereafter. You may, of course, need to have some coordination to collect that intelligence. So you may need to liaise with Interpol, Europol, wherever those type of agencies. You may need to liaise with third parties that have been tracking IP addresses since 2009 on Bitcoin. So there may need to be a level of coordination, of course, to enhance your intelligence, but at the same time, you have direct access today. And that is not something that you do have with financial services markets to the same extent, because you need to go through court orders, injunctions, international enforcement, an absolute nightmare. Whereas with blockchain today, you have direct access. You need to possibly adapt your criminal laws so that when it comes to enforcement and prosecutors need to take action, they have certainty. And also, you don't want to be in a situation where you're taking an action against someone and you put a seizure order on them, and that they simply just transferred the private keys to someone else, and they used the technicality to circumvent an order. On the policy side, I would not do anything more than to educate your customers on the risks, which you're probably already doing, and to lightly regulate and taking into account the non-face-to-face environment that exchanges operate in, the gateways, such as the exchanges. The gift of blockchain hasn't really reached fruition yet. And if you thought the internet was a good thing for humanity, then I'm sure that blockchain will not disappoint you. Lastly, I urge you to invite innovation into your jurisdiction. I believe the regulators should work in step with innovators. Now, that's a bit of a cliche at the moment, considering everyone's talking about sandboxes and red tech, etc. But there is some meaning to this cliche. This increases your oversight over the risks. It also gives you direct access into the innovators, and you see how these innovations can shape. And as you see them pragmatically growing, you can adapt the regulations accordingly. Not, here are some regulations, now you adapt, which is essentially what the bid license did. So my concern has always been since day one is to avoid reactive, ill-informed regulation. We're, 10 o'clock, I'm speaking with the EU Commission, Parliament about this, in fact, because even though they will be regulating exchanges by the end of the year, my concern is the detail of how you will regulate them. Are you going to place an onerous burden now on these exchanges to be doing enhanced due diligence, which would be complete madness? So you have to be very circumspect. And I vocalise restraint when it comes to regulation. And that's an irony considering I'm a lawyer and I make money essentially out of regulation, but I don't really think, I can sleep well at night if I was to say to regulators, please create more regulation. We have to deal with this situation very pragmatically. We have to allow blockchain to offer the same promise that the internet has provided to us, which is to change the world. Thank you very much.
Okay, thank you very much. That was a presentation by Mr. Vaziri, a lawyer with blockchain, sharing with us his own experience and advising us on a few approaches that we can take. The emphasis being on light regulation to allow this new frontier to possibly develop as we have seen for the internet. Having said that, he advises and made certain recommendations which, if we do take note of those, seeking to treat with the issue of policies, risk, the precautions that we need to take note of in going forward. And I'm sure we're going to hear a bit of that in the following other items that we have this morning.